right? Talk about order pairing according to ICT. This is what order pairing means, right? Let's say that we have something like this. We have a range. So according to ICT, price always order pairs lows with highs, right? That means that price will come down to sweep liquidity this way, and after sweeping that liquidity, to go for the liquidity on top. So price will come down to sweep the sell side liquidity, and then it will pair those orders with the buy side liquidity. So that is the concept of order pairing. Now, when we come to Ttrades Fractal model, we said that we always want to identify our point of interest, our key level, and we want to support this reversal signature at our key level, right? So if I'm to draw it out, it will be something like this. We want to support this reversal signature where our C2 is closing inside the range of our C1. So our C1 will be this way, and our C2 will be this way. That is when we are bullish. And it will be vice versa when you are bearish. Whatever I'm teaching will be vice versa when you are bearish. So whenever you get this at a key level, that is when we say that you focus to trade the next candle. So this will be your key level. Let me turn the key level to red, right? Now, whenever you get this, what is basically happening is order pairing. Price is taking liquidity here, and after that, it will pair it up with the liquidity over here. So Ttrades Fractal model or whatever is based on order pairing, right? So we take liquidity over here, and then we pair it with the liquidity on top. When you go to the lower time frame, you will get to see that you will see something like this. You see something like this. Price will take liquidity and then pair it up with a liquidity that is at this side. Maybe the liquidity at this side will be something like this. So if you see this schematic on the daily time frame and you go to the 1 hour time frame, you're going to see something of this sort. Price will sweep a low, create a market structure shift, and then pair that liquidity to the liquidity on top. So that is the idea behind this. Now we say that when you get this reversal signature, then you go to the 4 hour time frame. Now on the 4 hour time frame, you want to see, now let me clear this one. Now that we've understood the concept of order pairing. Come to clear this, right? We say that this is so simple that you guys should get it. You guys shouldn't be struggling. When you go to the 1 hour time frame, you want to see this. The 4 hour time frame, you want to see displacement and a fair value gap, right? You see a fair value gap this way, and then you wait for the next candle to open, come to that fair value gap, print it low, and then you position yourself to trade. Do you get it? So whenever the market opens this way, whenever you get this reversal signature, you want to see this on the 4 hour time frame. Price will move and then leave a fair value gap. And then you want the next candle to open, print it low, meaning for the next candle to, you want it to print it low and then form that same reversal signature. For the next candle too, you want it to print it low and form that same reversal signature. So it's going to be something like this. You want it to print it low inside that 4 hour fair value gap. And if it is printing it low, it will form that reversal signature because market cannot turn without forming that reversal signature. So it will form something like this, right? So we have it this way, and then we have it that way. So when you get your closure this way, like this, inside that 4 hour fair value gap. So if I'm to place test under them, I will say that this is your daily. This will be your 4-hour. Now inside this 4-hour, you want to spot this, right? You want to spot this signature inside your 4-hour fair value gap. And then you can go to the 15-minute time frame. When you go to the 15-minute time frame, you see something like this. You see that there will be liquidity, market will sweep liquidity. The concept of order pairing, form a change in state of delivery. And then that change in state of delivery will confirm this candle too. And then you can position yourself during the third candle. And you know that for a CISD to form, you want that CISD to either tag another CISD or to tag a fair value gap or to sweep a swing low and then form another CISD. And then you can position yourself to target liquidity, right? Or another way you can even do it is when price tags this 4-hour fair value gap, you can go straight to the 1-hour time frame, and then you look for something like this. On the 1-hour time frame, you look for a change in state of delivery this way. A change in state of delivery this way, and then you can position yourself long term with understanding of order pairing, long term to target this high. So when you go to the 1-hour time frame it will come down this way and then move up, right? And then you can target this high. So it will be something like this. So this should clarify things for you. And I think the simple model will be from the 4-hour fair value gap to 1-hour CISD, right? 4-hour fair value gap, 1-hour CISD. And then you can position yourself, right? I think that will be simple for all of you who are still struggling with this model. You can position yourself. So let's see if we will get an example on this. Let's see if we get any example on this. And then we will be done. We're not going hard. And then you watch it, rewatch it. So let's see if you guess anything. So something like this, right? This one. We can clearly see that the market came to this fair value gap. Right. Gave us a C2 closure. So that is the order pairing that is taking place. And the C2 closure was perfect. Of course, at this point, you should know what perfect and imperfect C2 closure is. So the market is order pairing the sell side here to the buy side. When you go down to the 1-hour time frame, you get to see it clear. So you get to see that the market has taken the concept of order pairing. The market has taken this sell side liquidity. So it's going to pair it up with the buy side liquidity over here. Right. Now that you've gotten a correct C2 closure, you want to go to the 4-hour time frame. But I went to the 1-hour time frame so that you see the concept of order pairing. You can even see that on the 4-hour time frame, we are not getting any displacement. I don't even know if we get any form of displacement. We didn't get displacement and the market just moved. But generally on the 4-hour time frame, we want to get a displacement for the market to come back to the fair value gap and then move, right? But you can clearly see that even the concept of order pairing worked over here. Let's go to the daily time frame and see if you can get more examples. You can get any other example. Okay, so even here with the concept of order pairing, okay, it wasn't a perfect C2 closure. Okay, perfect. This is a perfect one. But before you even do this, you should know how to find buyers. All these things I've taught you. So there is no need for me to go over. You have to just rewatch the videos. There is nothing new. So we can clearly see that over here, we are getting that reversal signature. We had that reversal signature, right? I'm just not basing on finding buyers or anything. I'm just trying to demonstrate what I just taught to you. Do you get it? But when you are applying it to the chart, you have to, take buyers into consideration, and you should know how to find buyers now. You should know how to find buyers. So when we go to the 1-hour time frame, let's just look at the order of the concept of order pair. We can clearly see that the market has taken this sell side liquidity, right? And as the market has taken this sell side liquidity, it is going to pair it up to this buy side liquidity. So we are expecting the market to move from here to here. Even if you don't want to go to the 4-hour time frame, I think on the 1-hour time frame you can look for your entry, because we have a fair value gap over here. We have another fair value gap over here. Let's see if the market will come down. If you join your midnight opening, right? If you join your midnight opening, which is going to be this one, let's see if price will be traced to any of this 1-hour fair value gap. Let's say you want to take an entry on the 1-hour time frame. So I don't think the market is giving any retracements. We had this fair value gap. Let's see. Well, the market didn't give us any retracement. Let's look at what's happening on the 4-hour time frame. Was there any fair value gap? Okay. So let's just look at the 4-hour time frame. So on the 4-hour time frame, you stick to the model. From the daily, you come to the 4-hour time frame. You want to see displacement. So we had a displacement. We also had a key level known as BPR. And you should know what BPR is. BPR is, if you don't know, I'm going to share a video in the group. So when the market came to that BPR, you can then go straight with the concept of order pair. You can then go straight to the 1-hour time frame. And then when did the market come to the BPR? I want us to do that. Whenever there is a BPR before a fair value gap, you should know that the market is going to choose that rather than going to the fair value gap, right? So when we want to see when the market came to that BPR, and then when it formed a CISD on the 1-hour time frame with the concept of order pairing, you can then position yourself. So 4-hour fair value gap, 1-hour CISD, you can then maybe position yourself around this place. Place your target under this low, right? Or just a little below it. And then with the concept of order pairing, you know that the market is going to pair it up with this. So let's see how it will move. And we can see that it happened, right? So this is what we are doing today. If you have any question, you can ask before we end the meeting. Hello, Ahmed. Okay.